I had the wedding last week. You were.
Yeah, I was invited. Cue cards too.
We need to talk about it.
Personal through
We're
the
all
business.
victims of it. Hi, I'm Jojo, the stylist, and
My name is Erika Herrera.
and welcome back to
The Powered Pair Podcast. Today we're going to be having Mr. Eloy Alaniz. He is an internal auditor and also my stepdad. So our special guest today is...
My name is Eloy Alaniz. I am the Chief Audit Officer for a nonprofit organization.
Nice.
Thank you for having me.
Oh,
Of
you're
course.
welcome,
Thank
you're
you for
welcome.
joining
Thank you for
us.
coming.
Absolutely.
Yeah. Okay, so how did you get started in auditing? This is like such a juicy topic for me. I want to know everything.
So, well, it's not as juicy as you may think, but so I'm an accounting major by trade, and so internal auditing is part of the accounting discipline, and so I worked as a CPA for about 6 years, or worked with a CPA firm for about 6 years, and then from there, internal auditing is part of working for accounting firms, and I was fortunate enough to be able to I see a opportunity with this nonprofit organization as their internal auditor, and I took that chance, and I've been fortunate and been with them for the past 25 years.
Wow,
Nice.
that's awesome. That's awesome.
Long time.
Okay.
Very long time.
I think one of the questions though is, what exactly is an auditor?
Auditor.
What do you do? What do businesses need to know about that whole side of accounting?
Okay, so as I mentioned, I work for a CPA firm, and those accounting firms do external auditing. And with the organizations and businesses, corporations, they also may have an internal auditing department. And basically, an internal auditor's role is to evaluate the company's operations and try to make them efficient and effective as possible.
That's amazing. So basically, you can see the problems that they're having are the over expenses, the maybe money that's being lost here and there, maybe areas that they can develop into a better way of using the funds. Is that kind of what you're doing? You're seeing it from inside and you're looking at the business as a whole?
Right. So internal auditors not only they do finances, but they do other areas within the organization. But finance is probably one of the biggest areas. Obviously, a business is trying to grow their finances, grow their business. And so internal auditors, they typically would review anything financials that the company has to offer. And so there's a lot of transactions that internal auditors must evaluate to see if they are using those expenses, the transactions are appropriate based on what the company is trying to do.
So what sets you apart from an external auditor?
A very good question. So, internal auditor, I am part of the organization. I am an employee of the organization, whereas an external auditor is not employed by the organization. They're part of a CPA or accounting firm that goes in and is contracted by a company to come in and to look at their finances, to do the audits of the financial statements. Internal is part of the organization.
Oh, makes sense. An internal expert.
Mr. Alaniz,
Yes.
did you always know that this is the path that you wanted to take? When you went to Notre Dame and you were there at school, where you were like, I'm going to become an auditor?
Not the auditing part, to be
Okay.
honest with you. So I went to the University of Notre Dame and graduated with an accounting degree. So I knew I was going to go into the accounting field and provide support for businesses in doing their accounting. The auditing part came later.
Okay.
After graduating from college, didn't know anything about the auditing world, okay? But auditing is a subset of accounting.
Okay.
And I learned that once I graduated and started working for a local CPA firm. And so that's when I was introduced to the external part of it, because I was working for a CPA firm. And so I saw the auditing part, and I grew to enjoy doing the auditing versus the accounting part of it, and tax, more so because the auditing is when a company has already developed their financial statements, and they've already got their bottom line, and as auditors, we go in and verify or validate that what the accountants for the companies have created, the financial statements, whether those are accurate, and then it's deeper also. We also make sure that whatever the company is doing, that they're doing it in the most efficient way as possible.
That's so important.
So for me, it was once I got into it, I started liking it because it was a way for me to help the company grow and prosper.
Yes.
Nice.
I think that is so important for any business, and I think that a lot of small businesses don't know about auditing, but it really is a way to say, you're overusing your funds here, you're underusing your funds here, you're mismanaging money here. It's the way that the business continues to scale versus just staying at the same area.
Right.
If you don't check your numbers, and we use it as the term checking your numbers, but it's really auditing the business. If we don't check our numbers, then we're never going to be able to scale up. And then to have that plan, I think that scaling is never something that you can do overnight. I know at least in most businesses, it's something that you have to plan for. Okay, so I am overusing funds here. How am I going to change this? You can't just change it from one day to another. God knows that that's not the case, right? There are so many times where I've wanted to change things, and it's but with a plan, then you can execute it throughout the next few years and hopefully be able to scale up. And I think that's probably what gives you the passion that you have.
Companies are able to do it on their own, scaling up, but are they doing it in the most efficient and effective way? And that's where internal auditors come in and help them achieve what they want to at the quickest and best way of doing that.
I love that.
Alrighty, Mr. EJ, what's the biggest misconception that people have about auditors?
So the biggest thing is that we're out to get you. Okay.
Oh shit.
So yes, that we're out to identify you, call you out, and have your supervisor and the boss of the company know that you're doing something wrong. Okay, and that's the biggest thing. We're not here to impact someone's career. All we're here as auditors to do is to identify gaps or weaknesses in whatever area that you're responsible for and help make you better. Okay.
Oh, that makes sense.
Versus identify you that, Jojo, you did something wrong. Okay. It's why did you do that wrong? There's a process that you had in place get you to that point. And so we're here to make sure that doesn't happen going forward. So that's the biggest misconception, is that we're here to, out to get you and to make your bosses know that you're not doing what you need to be doing.
Yeah.
Nice.
So in fact, it's actually the opposite. It's to help us get better at whatever we are
Stronger,
doing.
yeah.
And
exactly.
I've heard many times, numbers don't lie. They're black and white.
100%.
There's no pink numbers. And so a lot of times, if the numbers are saying something, then we can fix it. We can find it. You're always going to be able to trace it. And that's what auditors do. Yes.
They go back and trace how we got to that point, and if something doesn't look right on the financials, auditors go in and be able to go all the way back to the processes that led to those numbers being what they're reported.
I love that.
Nice.
Okay, so pretend we're 15 and we're trying to figure out what an audit is. What exactly is an audit? I'm 15.
So I can do one better. I can explain to a elementary school age student 9, 10-year-old what internal auditing is about. And so basically, the way I would explain it to an elementary age student.
Because he has done that already.
Actually,
he was just at a career day.
Actually, I have. I did a career. I was invited to do a presentation at a career day at a elementary school, and so you would think, okay, at the elementary school you have policemen, firemen, those types of jobs or careers
Uniforms,
that elementary age students understand. And then here I come, okay, you're going to do internal auditing, and they're like,
pull out your math papers right now.
And they haven't even heard of accounting either. So here I have to bring it to a level that they understand. And so the way I presented internal auditing to those elementary students was that it's like being a detective. Okay, it's law enforcement, police officer. You go in and you try to put a puzzle together and try to figure out what happened in whatever situation. I didn't use murder or anything like that, but like if
somebody murdered the numbers,
or if someone stole something from you,
that's a good.
and that's the way I the analogy came out is someone takes something for you. You get a police officer who's a detective that has to figure out, what happened and how it happened and who did it, and they would bring. It's like doing a puzzle. You have all these pieces, but you don't know how they quite fit. So you have to look into those pieces, and then you can kind of see the shape of those pieces and bring it all together.
That was a good analogy.
And that's how you can you can figure out who stole from you or whatever the case is.
Wait, did you give him a treat? Did you give him any kind of souvenir?
I did not. I did not.
Calculated.
Yeah. Well, I mean, internal auditing. I'm not sure there's treats that can offer, but
Sorry, you can keep going.
The only treat that I gave him is what I know about.
There you go.
Internal auditing.
The treat of knowledge.
Yeah, that's exactly
Treat of
right.
knowledge.
Treat of knowledge. Exactly.
Okay, so important question here. Who gets audited and why do they get audited?
So anyone can get audited, okay? Even an individual can get audited, and that would typically be done related to taxes. When you file your taxes, you may get audited by the IRS as an individual. But mainly internal auditing is auditing the business, a business. And typically any business can get audited externally if the company hires the outside auditors, or if you have an internal audit department, like my organization, of which I'm the head of, then you can audit, the company, and it's based on risk. You identify what's the riskiest thing in that organization, and you develop a plan and how you're going to go about to audit. And typically, like for my organization, that is my role. So I'm going to audit based on risk. If something's out there that we think could be giving issues to the company, whether it's finances, whether it's programs or things that my organization does as nonprofit, we will go and audit to make sure that things are working effectively. But there are other, depending on, as I mentioned, nonprofit organization, there are certain required audits that must be done. Federal government asks for certain audits. The state may ask for a certain audit. So in certain cases, based on a program, a grant for nonprofits, you are required to have certain audits done, whether it's financials or the program itself.
And are ever audits bad?
Audits are never bad unless you're doing something bad. Right? But audits, as I mentioned earlier.
Lock me up.
Yeah. as I mentioned earlier,
Keep that out.
Yeah.
Don't bring that here.
Yeah.
audits are to help the organization be better, be more effective, be more efficient. Okay. Now, there is something, I'm not sure if we're going to get into this, but there's audits and then there's investigations, and that's when people are doing the bad thing.
Yes.
And that's a separate type of activity. It's not an audit, it's an investigation, and that's where you're going to see where when there's someone stealing and there's wrongdoing happening.
Makes
That's
sense.
never good.
Yeah,
Yes.
so, but audits are, by and large, a very good thing, because it's going to help you as an employee do better,
Yes.
and the company overall succeed.
Nice.
Love that.
Yes. Definitely helps resolve the issues within the business.
Absolutely. Okay, Mr. Alaniz, what immediately catches your attention, and what are the red flags when you're doing an audit?
Okay, so when, I'm internal, as I mentioned, and so the biggest thing that catches my attention is when you have one person doing all the functions. Okay? So if I was an external auditor looking at a small business and one person is doing all the accounting functions, whether it's posting payments, okay, issuing checks, doing payroll, reconciling their accounts, making deposits,
Because it could be.
and putting everything in the system, that is a red flag for an internal auditor, because you don't have separation of duties, and even more so if you have a small business and you only have a small number of employees, so you have to do that. The biggest compensating control for that business is to have someone review that person's work and everything they're doing, okay, to avoid that person stealing from you.
That's so
Okay?
true.
Yes.
So that's the biggest red flag that I notice, is if we don't have separation of duties, of
Like-
functions within a
Like a
business.
checks and balance.
You definitely need checks and balances, and the checks and balances, the balances is having separation of duties, so there's a second set of eyes doing certain things, and a review process as well.
That makes sense.
Yes.
That makes sense.
What are the most common mistakes that happen in bookkeeping? Does sloppy bookkeeping cause bigger problems?
Yes, yes.
that's a
Those are-
good
Those are
question.
good questions.
Thank you.
Yeah.
Yeah.
So I think the biggest bookkeeping error is when you have, as I mentioned earlier, if you don't have separation of duties, you may have someone, doing all the tasks, and to get things done timely, I think they make shortcuts. They do
Yes.
shortcuts and not post things properly.
Yeah.
And that's typically what you can find in small businesses or in my organization that doesn't have enough people to help process all this activity. And as far as sloppy bookkeeping leading to bigger issues, it definitely can, because you're as I mentioned, and this kind of dovetails from what I just said, if you're making mistakes or not posting things properly, your financial statements are not going to be accurate. And so, like business owners rely on financial statements for their bottom line, and are able to make decisions based on the financial statements.
Yes.
And if you don't focus on doing proper bookkeeping, and it's sloppy, it's gonna, in the end, it's going to impact the organization as a whole.
I agree.
And what you mean by financial statements is like every quarter, after you do a quarter and you see, okay, this is how much that you've spent on X, and this is how much you spent on Y, and this is how much you spent on payroll, and this is how much you've spent on overhead of the facility.
Yeah.
And if you're wanting to either cut back or buy more into a certain company or things like that, if you have sloppy bookkeeping, then you really don't know if you can make that investment, because you don't know if the numbers
Right.
are correct.
Correct.
And so that's exactly.
Right. Yeah, they might have keyed in something wrong, and they may show more expenses in your bottom line, how much profit you have, or monies that you're able to use towards other expenses. You're not going to have that accurately, so you're not going to invest in that new equipment or buy supplies or anything, because you see the bottom line that someone put a lot of expenses, duplicated things, and so it's going to impact you going forward, or your business and growing and stuff, things of that nature. So
that makes a lot of sense.
and
It does.
little more, you brought up financial statement, which is important, the types of financials. So what you were talking about, there are several financial statements, but two that are important. And one of them that you were kind of alluding to with the expenses, that's your profit and loss statement.
Yes.
Okay, that's your income statement. How much monies you're pulling in as a business, you're making for your services or products that you're selling, and then you have your expenses. Okay, and the expenses and the revenues net to your profit. Profit is if you have more revenues than your expenses. Okay, loss if your expenses are more than what you're bringing in as your sales or services. And then the other one, which I believe is is just as important and maybe even more important for a business owner to be cognizant of and have those. That statement frequently is the balance sheet. The balance sheet tells you your position. It tells you your liabilities, how much you owe, what your obligations are, what your assets are, and how much equity you have in the business, which is important so that business owners can make decisions. So two main financial statements, your balance sheet and your profit and loss statement.
Mr. Alaniz, this is going to be a fun question. I'm scared to ask you. But how important is it for businesses to save the receipts? And do we really have to save every receipt?
So, no, it's not important for all businesses to save the receipts, okay? Because in many cases, the transaction may be evident of what it is. Okay? For instance, you may be leasing space, right?
Yes.
So you're paying rent every month. You don't need to see the invoice for that month's rent.
Right. It's
Right?
the same number.
It's not only it's the same number, but the company you are paying is going to be whether on the bank statement as a transaction, or it's going to be on the check. Okay, so that's self-evident. Okay, in terms of keeping receipts, they got to be the specific ones when there's company cards involved, whether it's a procurement card, a travel card. You may have to have the itemized receipts so that the auditor, whether it's an internal auditor, an external auditor, or an IRS auditor, okay, when it comes to taxes, they want to see the itemized receipt of the transaction. The banks will not have the itemized receipt. They will identify who the vendor was that you paid the expense towards, or on a credit card. Okay, it's not going to give you the breakdown. It's just going to tell you, I went to Home Depot, or I went to a cleaning supplies store. Okay, but it does not tell you what you are purchasing through the bank statement or through the credit card statement. Therefore, you need to keep the itemized receipt of what you purchased to support why this transaction is part of your business and it's helping you move your business forward.
Let me tell you that one of my biggest hurdles is receipts. I hate paper. I hate clutter. And it's so bad. We were laughing because Mr. Alaniz is my stepdad, right? So I call him dad, and he gets after me all the time about my receipts. So the system that I have come up with, and this is the only way to do it, because we know that our receipts fade, they get crumbled, we spill coffee on them. whatever it is, you get a receipt, you take a photo of it, put it in the iCloud, send it to your email. That is the only, sometimes I'm like, okay, 2024 receipts, and it just like populates with everything. That's the only way to do it, because or maybe you're more organized than I am, but that's my tip.
Yeah, again, you don't have to, businesses do not have to save all the receipts. You need to be cognizant of what's important and what your expenses are and what you would need to support those expenses through an itemized receipt or an invoice. Some things are just, common sense. If you have an alarm system, you're paying an alarm company for your business.
Makes sense.
So you don't need to have a receipt to support that, because anybody can see, internal auditor, external IRS tax auditor can see you have security system.
Yeah.
Right? And so they see that you've been paying, you have expenses related to security, then it's not necessary to keep all those invoices that come in. But when you have credit cards again, you need to have the itemized receipt to support what you're purchasing.
Yeah. That makes sense.
If every business wanted to be audit ready today, what do they need
Oh, that's a good
to get
question.
started today?
Yeah.
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 Okay.
And what system do they have to have in place?
Oh, that's a good one too.
Yeah, those are good questions. So you definitely need an accounting system. That's the
Okay.
first thing you should have as a business to record your transactions. So there are systems that are inexpensive that businesses can purchase to be able to track their financial activity. So you need to have that in place, especially to be ready for audit, because they'll want to see your financial statement and what you've already accounted for. So to be audit ready is obviously have the, as mentioned earlier, have the supporting documentation,
Itemized receipts.
for the transactions that you have on your financial, your accounting system. So that's important to have, and to make sure, you do your reconciliations of your bank, your bank account. That's extremely important to do.
Yeah. Mr. Alaniz? Dad. How often should business owners look at their financial statements?
Okay.
And do you think that they should actually look at their statements and understand it, or just leave it to the CPA?
Okay. The answer to the first part of your question is monthly.
Every quarter.
Every month.
Every season.
Every
change.
month, as a
What?
good business owner, you need to be able to see where you stand.
I
Okay.
love that. But
Where you stand, okay? And if you have a CPA preparing your financials, no, you do not leave it up to them, to tell you what you should know as a business owner, okay? How else are you going to grow your business if you don't even know or understand the financial statements?
Okay.
Got it?
Yes.
Good. Did you get that,
helpful.
Jojo?
Yes.
Got to do it too.
I
I
did.
did too, sir. Sorry. So earlier you mentioned that businesses should have, kind of like a checks and balances. What about a small business that's barely starting out? How do we audit ourselves, or how do they keep track of
That's a good question.
of their finances without having a big team? Eventually we do plan to grow, but we're not there just yet. How do we keep track of that?
Excellent question. Excellent question. So you leave the auditing to the auditors, whether internal, external, but businesses, especially small businesses that are just getting started, there's something that's called monitoring. And that's what business can do themselves. They can monitor transactions, oversee people doing, as I mentioned, as a compensating controls for small business that only has maybe one employee that's doing everything, and to potentially avoid red flags of fraud, for that person potentially to steal, you want to have a compensating control, you want to have supervision, you want to monitor what that individual is doing. But to for businesses to start off, you and I kind of mentioned this a little bit. You need to have an accounting system. You need to have your bank account, your business account set up, and you need to have you need to have your payment processing, whatever revenues you are going to bring in, whether it's a service that you're going to provide, a product that you're going to sell. You need to have how you're going to get the money. What's your method? Are you just going to do all cash? Nowadays, people don't deal with cash. It's all credit card. So you need to have payment terminals, and you need to set those up to go directly into the bank account. And you need to have someone that you can trust to be able to do your accounting. Unless you can find an accountant to be able to help support you, my recommendation would be to go to a CPA firm, okay, to be able to support your accounting piece until you get yourself set up, and you can do it internally, and you won't have to pay for a CPA to do that, except for your tax return at the end of the year. So, you want to have your established bank account, an accounting software if you're going to do it internally, or else the CPA would have their own. Okay, you're going to be paying them to get all your transactions and do your reconciliations and things of that nature. So that's what I would say that would be needed to start off a new business.
Okay, so now we're going to go into our mid-episode game. It's going to be red flag, green flag. If you like it, it's a green flag. If it's bad, it's a red flag.
Okay.
All right.
Is there in between? There's no yellow?
We can do a yellow flag. White flag?
There could be a depends.
Okay.
A yellow. It's in between.
We'll throw in a yellow. Okay.
We'll see what the questions are.
Okay.
And then I can.
I pay myself whenever I have extra money.
Oh yeah, red flag.
Yeah.
Red flag. It could be some yellow, but mainly red flag.
I never look at my profit and loss statements.
Oh, red flag. Big time
My
red flag.
spouse buys office supplies with our personal credit card. No, with our, yes. But they're talking about office supplies for the business. Office supplies for the business with our personal credit card.
Wait, you're married?
No, but it's the game.
Got it. I didn't know that. Yeah.
I had the wedding last week. You were,
Yeah, I wasn't invited.
you were sleeping.
I wasn't invited.
You were working.
Red flag.
Okay.
I only reconcile my bank account at tax time.
These are all red flags. That's
know.
bad. That is bad.
I keep receipts in a shoebox.
That's it's a
Cada
yellow.
quien.
I'd say yellow. I mean, at least you have receipts.
Yeah.
Right?
There you go. Okay.
I don't separate business and personal expenses.
Oh man, that's red flag.
Green,
Right,
green,
Erica?
green, green. Ah.
Super.
Super red flag.
My cousin keeps my books.
Well, if your cousin's an
We
accountant,
don't know what the cousin. Yeah, I don't know the
then
cousin.
Who is the
that could, and you trust
more
them.
information.
And you trust them. It's green. If
Yeah.
you trust them and they're accountants.
Okay.
I haven't looked at my balance sheet in 2 years. Girl, it's red.
You answered it, Jojo.
Yeah.
You don't need
Sorry.
You didn't need help from me.
My employee is the only one who handles deposits.
So that could be yellow. Okay. Just depends on, what other things that they do.
Yeah, their titles in the
Yeah.
business.
Yeah.
Are they trustworthy?
Yeah.
Yeah. It could be. It
might
could be
be
yellow.
good.
It just
Steady.
depends.
It's
Just depends.
steady. If
How
any
you
money's
train them.
missing,
Yeah.
Yeah, that's an in-betweener. You just
Yeah.
don't know.
I don't
Typically,
know.
you don't want that.
yeah.
Yes. I don't know my gross and profit margin.
Yeah, that's a red flag.
Yeah. Now for some fire shots. Okay, quick answers. Coffee or tea?
T.
Tax season or audit season?
Audit season year round.
Spreadsheets or calculator?
Spreadsheets.
Early morning or late nights?
Late nights.
Excel or accounting software?
Accounting software.
Messy desk or clean desk? Let's be honest here.
Messy desk if you're working.
Yeah.
Right? So if you're working.
Favorite financial statement?
Balance sheet.
Biggest bookkeeping pet peeve?
bookkeeping that it's not done timely.
Do you secretly judge people's bookkeeping when you see it?
No.
Okay.
Only yours.
What's the funniest excuse you've ever heard? The funniest, sorry. What's the funniest excuse you've ever heard?
Can I answer that one?
You can.
I'm gonna talk about Schitt's Creek.
Go for it.
Oh my
Yes.
gosh. Okay. I'll
think about something.
So this was years ago when I started my business, and I don't remember what it was, and we were talking, and he said, you can't write that off. It could have been like a car, like I wanted to buy a car or something, and I wasn't supposed to write it off because I use it for personal plus business. If it's not only for business, you cannot write it off. And I was going back and forth, but it is for business. I'm going to the office. I'm just dropping the kids off on the way. And he said, that's absolutely not gonna.
Yeah, you can write off a portion of it, but
like the gas.
not
and
the full.
Yeah. So he broke it down for me. And so right around then, Schitt's Creek was coming out with that show. It was hilarious. And the son from Schitt's Creek sends the dad, I send it to my dad. But he's talking to his dad, and dad's like, where did you get these chairs? What are they for? Oh, they're for the business, but they're here. They're massage chairs. And he's like, what do you mean? He's like, yeah, I bought them for me because I'm stressed out with the business or something like that. And the dad's like, then they're not for the business. And he's like, yeah, it's a write-off. And it's like the funniest thing because that was literally me and my dad that time. And I was cracking up. Behind the scenes, I was cracking up. We're going to have to show a clip of that because it's hilarious.
Yes, I remember that.
Yeah. Okay, Mr. Alaniz, last question. If you had advice for one of our audience who is starting up a business, what is the one thing that you'd like them to do this week or before the end of this week so that they could elevate their business?
Well, it's a loaded question. I mean, the elevation part, there's a lot more to that, okay? But for next week, they should be definitely reviewing their financials, making sure that their reconciliations are completed on a monthly basis, know how much money they have in their bank account, and that's through the reconciliation process. You would know that. If you've had credit card transactions, start gathering those itemized receipts that it's hard to differentiate between what you may have purchased that is related to the business or maybe personal, and stop using personal for business.
Love it. Thank you so much for being on with us today.
Absolutely.
We really
Thank you for having
appreciate
me.
it.
Yes, thank you for joining us.
Yes. Our goal is to educate the RGV as much as we can, or help them. We're not educating them. We're just giving them tips and pointers so that they can become stronger and so that we can keep small businesses around.
Excellent. And hopefully I was able to enlighten the businesses of the RGV. Thank you.
Until next time.